I think what's really interesting is banks actually have done a lot of work in the digital space. They work really hard to transform their businesses to cater in certain aspects. They haven't got it totally right yet, but they've invested a lot in it compared to other sectors. What I'm really interested to see is actually how they start thinking further ahead and start capturing audiences such as Generation Alpha. So, kids who are born into a world where the internet exists, where they are taught using digital devices, they're learning more. How can we educate them about money and bring them on a journey where when they reach the age of maturity and we open their first account, they're already bought into a bank as a brand or as somebody who has nurtured them, has taught them, and actually they have much better financial awareness than we may have done when we were younger.
They have fewer barriers as well, though, won't they? Because, I guess our age group and people that are in older generations have got that kind of legacy behaviour that you go to the branch to do these things, and that's where your money is safe. Like, that was the point of a bank to begin with, wasn't it?
Yeah.
Whereas, do banks have to, like you say, they've got to look to the future. There's only so much they can perhaps do with the existing audience profile. If they've got people that want to pay in cash, or they've got older users that don't want to go digital or can't go digital, they're going to have to still service those people. But it's future forward, like there's a huge amount of opportunity for them, isn't there? Not just adoption of digital banking, but like how else can you get banking proliferated through other types of service?
It is. I think that comes down to a lot of that's kind of propositional, but also there's also let's not assume the banks aren't slightly culpable here. The reason, as you said, Chris, the reason the banks have done a lot in digital is because the government told them they had to.
Yeah.
It was legislated that they must.
Totally true.
And prior to that, they'd done very, very little, actually. So when we look at the products and services banks offer, they're relatively unsophisticated. They really haven't evolved. The fact that a savings account now is a completely worthless thing to have. Far better ways to secure your money than in a savings account.
Yeah.
What that means, therefore, is help me put it in the right place. So you can actually provide tools and things like that you can do that with digitally. And some of the banks have started cottoning onto that and actually trying to do that. It does mean you have to change the underlying products and services that you have as a bank, not just have the same old stuff but deliver it digitally.
It's part of that reset, though, isn't it, in financial services, because they haven't historically had that much mobility from a consumer point of view. People have stuck with the same bank, and so therefore you just accept it. But if you can, if you can move around between banks.
The flexibility is not there for that, though, at the moment, I don't think. It's not an easy process to move between banks. I think the admin that's involved that people don't want to have to do, as Ben alluded to earlier, people want an easy life. You set up your direct debit so you don't have to think about them again. If it was easier to switch a bank, you would maybe do it because there are better offers. But you've just also got to look, there's much of the sameness between banks at the moment as well. The differences are minute, so what's the point in changing?
Where do we think the kind of the spaces fall for, say, our more traditional banks like our HSBCs, our Barclays, versus our challenger banks, Monzo, Starlings? Where do we think the future lies for those two? Because that's a really interesting perspective, because one has a load of legacy, they have the checkbook scenario.
Yeah.
The other doesn't, but doesn't necessarily have the infrastructure to be able to support the products and services that you could really get from traditional banks.
So picking up on two things there, right? The first one being Henry's comment around switching.
Yeah.
So actually, one of the government initiatives was around switching. So it was to enable 7-day switching. It must be facilitated by the incoming bank. So your newly chosen bank has to facilitate it, and your old bank has to respond within 7 days so that the switch can happen. They also have to change over all of your direct debits, all of your outgoings, things like that. So it is actually automated. The problem is information. Yeah. People don't know that.
Yes,
so
and educating people on that. Yeah, exactly. It's not out there.
That's precisely it. So I think there's that problem for a start. So information and education is a problem. And the banks, obviously, why are they going to tell you that you can switch? They're not going to tell you that. So really, this is the same as the open banking question. The government actually have a fundamental responsibility there to ensure that people do understand. With regard to the challenger banks, I'm going to go back to the earlier point that actually what Monzo and Starling, N26, those kind of guys do really well is digital servicing. Yeah. Their products, are they any different?
If anything, I'd say that they're weaker in a lot of ways.
Not in my experience.
What I'd say that they offer is a brilliant, seamless and lightweight service that is great for certain areas in life. You want to set up a bank account? You can do it in 10 minutes. You want to go out to a restaurant with your friends and easily split the bill? Perfect. It offers you great kind of lightweight lifestyle solutions. What it doesn't offer you is robust financial servicing, which is what is missing. And it feels like the banks can't offer the lifestyle solutions that you get from the challengers, and the challengers can't offer that kind of robust financial servicing that the traditional banks are providing.
So if I think at one end of the spectrum, one of the banks we worked with is skewed towards a lower income demographic.
Yeah.
A lot of the work we did with them was around how do you help people manage their finances from payday to payday, right? So it was very much short term, low numbers, but very high impact if it goes wrong. The other end of the spectrum, we've also worked with a number of investment companies, where this is about personal wealth funds. And that's an entirely different conversation. If as a bank you are servicing both sets of customers, which they are, you can't really put those two in the same experience. Not quite. Not without doing an awful lot of work to silo them. Which probably is around things like Premier bank accounts and things like that.
There's a lot of opportunity for the banks to just think differently, though, isn't there? I mean, do you think, in your experience, are they already doing this? Are they looking at how AI, for instance, could help be more predictive about how people manage money, for instance, or what alerts and reminders they might need?
I feel like it's tricky because there is so much change people want to do, but there is so much legislation in place that is preventative. And so they're caught. They want to progress, they want to move forward, and there's this barrier that says there's certain things you can't do.
You're right. It's either legislation or legacy. I think are normally the two blockers.
Yeah, absolutely.
But and in terms of appetite, I don't know. What do you in our experience? It's.
I think there's also a question of investment,
Yeah.
right? So we've undertaken a number of kind of exploratory, future visioning pieces for financial organisations, including banks, including high street banks, and really often we get a lot of interest internally. We can completely understand the long-term value of investing in a certain piece of functionality at this time, and it will pay off kind of from about 5 years' time for the next 5 years. But if that doesn't appear on the financial reports for the bank that year, and in fact is a negative, it's probably not going to happen. So there are just plain business pressures around the investment in technology as well. So I think for the banks, it's a safer bet to look reasonably short term rather than reasonably long term. And we know that with technology anyway, that looking much further than about 4 or 5 years is completely pointless. So you've got to keep a finger on that future pulse, but you've actually also got to be really pragmatic about the now. So for me, that's about building kind of modular approaches to common themes.